Chad's, hope you're having a good weekend. It's Saturday while I'm recording this. And I've made some moves in my DeFi portfolio, so I thought I'd drop a video. I've been saying on and off that I'd take profits on the leverage position that I have been maintaining for a while. So I went ahead and did that. And mostly because of time capitulation on my part. I'm waiting for ETH to go above 5K. It's still hovering around, 45, 4,400, or was. Now it's at like 42.50 or something like that, or 70. And so whenever that kind of happens, if it's like a leveraged position, I kind of just go towards the low risk or lower risk bias and kind of just take profit and start a new position. So that's what I did. I waited a bit before I did that, but you can see now that in AAVE I have 100 ETH instead of like 96 ETH, or like 95 point something ETH. So I took 30K of profit, 50K of total profits, right? I think it was like 188K or 186K that I grabbed at ETH at 44.50. So when ETH was at 4,400, I paid off that 134K that we whittled it down to, that loan, and I took, like I said, put 30K in this liquidity pool. So we had 50K before. I added 30K to that just to increase the speed at which we or pay off our loans when we take some out, like I have here. And then the other 20,000 I put, like I said, back into ETH. Bumped up my ETH balance there. What I also did was I took out another 150K loan. This is back when ETH was around like 3,300, right? So that's when I took out this 150K or 3,350. And then I bought more ETH, wrapped, staked ETH. And then that was only 100K of it. The other 25 or the other 50K, 25K of it, I put again into another liquidity pool that's earning a bit of money. And then I also bought AAVE. And in the second half of the vid, I'll go through why I put money into AAVE. I'm already down a bit. I'm down like 2K on the AAVE buy. I bought it like 310 or something like that, 315. And now it's down to 300. But that's not so painful for us. What we do is we do long-term moves, or at least medium-term moves, right? At least a couple of weeks to months, while we try and improve the returns of our portfolio. So now we have around 100K earning us money or fees to pay back the loans that we take out against our ETH. And so now we have, just a smaller version of that leveraged position we had earlier. And that's really because of the price action of ETH, right? So I'm convicted in my thesis, right? And I have confidence in it, but I'm going to, listen to medium term or short term market movements, especially for my leveraged positions. So that's why I took profit on that leveraged position. I'm glad I did. Now we're below that 4,500 or 4,400 mark. But that doesn't change the long-term story for ETH. We're just positioning our portfolio better for the short-term and medium-term movements as we see them. So anyways, yeah, that's the gist of the moves that I've made. We're around $500 in revenue. I'll go out harvest that by the end of today or something and see how much or what ETH does. This second pool, this 25K, this is meant to be kind of like a ETH buyer. So if we go down to some of the price targets that I'll go through later when I go through the other tabs here, but I've set it up so that like the range goes to like $3,500 of ETH. So if ETH does visit that bottom tick, right, in the pattern of, or the drive towards above 5K, we'll end up buying ETH, and then I would exit this position once it has bought. Like there's more ETH than USDC in it, then I'd take it out so that we don't sell it when it goes back up again, and then like add to my leveraged position here of 22.8 ETH. This 100K, right, that would turn into 125K as a leveraged position, but with this buying ETH, at the lower prices as it goes towards 3,500. That's why it's kind of like a limit order, stink bid, at lower prices. So if it does go down there, we'll make fees, right? We'll pay off more of our loan while it goes down. And we'll also buy ETH. So, if it does go down there, we have, essentially bought ETH while it was dipped. And then I'd add it to this, and hopefully when it goes up past 5K again, then we would look to close out the position again, pay off this loan, whatever the loan balance is by the time we get to that price level. Okay, all right, so let's talk about why we bought a little bit of AAVE. Okay, so let's talk about AAVE and why we bought around 25K of it. And really, this metric, the total value locked, how much loans there are, active loans, $27.5 billion of loans. It's clear that AAVE is like a dominant DeFi protocol. It actually also benefits from stuff like Lindy that we talked about for basic layer one blockchains. The apps on those blockchains, if they're truly permissionless, which AAVE is, includes apps and like de-risking their security profile, especially for like AAVE or like CDPs, like debt protocols, right? The only way they gain trust as secure is having a bunch of money in them over time. And so this kind of gives us an investment opportunity in terms of these protocols that like keep growing and how much value they have locked. And AAVE is like now up to a point where it's like a good company or a good bank, and it earns money, right? So if we go to revenue, we can see that it like earns, and this is like directly to the protocols, like profits, right, to token holders, is like a couple $1 million a day, right? $3.5 million a day. The fees that it's doing this off of, this is like all fees that users pay, and a lot of these go to the lenders of the assets on AAVE. But you can see in like 4 years or something, there's like $1 billion in fees, right? And that's actually a huge amount. And I think this scales. You can see how it has scaled so far over the past 2 years, right? As more DeFi has gotten into like more legitimacy, you see much higher amounts of money in here. And now I expect this to like 10x, right, in like the next couple of years, because of all these stable coins coming in. So this fully diluted market cap of like $5 billion for AAVE is super low or reasonable for the amount of fees it's earning, right? Like, 20 million a week. And then, earning a couple $1 million a day in just like revenue. And of course revenue is like profit for protocols like AAVE, right? There's like no there's no like bunch like thousands of employees or anything. It's like just a smart contract on Ethereum, mostly. So there is other costs, but still it's really high profit margin. So this is a good like stock to buy, a DeFi company stock to buy. And then of course, like I showed you total value locked, which is just like monotonically up. I think the other part of it is, these DAT companies that I talked about in the last video, these treasury companies. AAVE is, I expect them, it's like the only place where they have enough liquidity to like take loans out against their ETH. So I expect them to use AAVE in force. And we're just starting to see, this is why I think the TVL has ticked upwards, and I think it will continue ticking upwards. And then with the more active loans and stuff that grow on AAVE, this fees and revenue will grow. So all of that is going to translate into this price of $300, I think, going up as well. A price target for AAVE, I think, is like, if we just go take a look at like AAVE price history, I'll show you guys a little bit. You can see that it's on the higher end of like its historic prices, but and in 21, it was like crazy. People were like speculating, really, like having the current thesis of like AAVE is going to have the bunch of stable coins and like be a world finance kind of hub. Everybody was expecting that in 2022, and then it didn't happen. And there's just like a slow burn, right, of like plateau of like productivity kind of, or well, valley of despair probably in this case. But while that's happening, Aave is building Lindy and just like confidence in its protocols, and then the rest of the world in terms of legal stuff and legitimacy of DeFi and stable coins and banks coming in. That happened later. So now we see this kind of repricing, I think, of Aave as an asset. So we want to get in on that. Doesn't matter if it's like going on the downward trends right now. We lost a bit of money in terms of the 25K we bought, but we're going to keep it for the long term. We're going to sell, when it comes revisits these highs of like $600 or something. So hopefully we make like a 2x and stuff over like the next few months. That's like the kind of call that we're making, or the bet that we're placing. And I'm confident in it, so we'll see what happens. But I think this is another, for those who don't have as much ETH as I do, and you want like something else that you want to invest in, that's like a, not another shitcoin with like starry-eyed, pie in the sky kind of goals. Aave does have, in terms of like pie in the sky, it's like very ambitious goals, but Aave is like closer to making that reality than anything else, I think, because it's just like has chugged through, has not had any hacks or other issues like that. So the security of Aave is very high. It's a pretty battle tested smart contract, and I expect it to be much more valuable in the future. Anyways, so that's the reasoning. Hope you guys have a good weekend. Don't worry about the chop in the ETH markets and crypto markets in general. I think we still have smooth sailing in the future ahead of us. All right, cool. See ya.